The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Off 16 points on the S&P cash as we start the show. 2.66 billion shares, so volume is brisk. I don't know what else you could say about it other than that. We did not touch Friday's low. We came within about 2.5 points on the S&P cash. I suspect that means that we still have the ability to go down there and touch it, at least before we go higher. So probably a lot of nothing by the end of the day, other than being off 15, 16 points with some volume. Of course, what do we have now? I need to have the sound of a ticking clock. Maybe we can have them play the little thing I normally play there in the background. There it is. Yeah, that's exactly what we're listening to. And what is that? That's time running out. Why is that time running out? Because fund buying is almost over. And generally, this is about as good as it gets. Of course, we've talked about this before, but I know we get new listeners, so bear with me. See what I did there. Anyway, it's a thing that happens. And I know we always get new people. So let's go ahead and go through this, what fund buying is. There are really two kinds of people on Wall Street that have to do with money. One is a fund manager, and another one is a money manager. And those folks are, hopefully we're still there. I had something that looked like it blew up. There it is. Okay. Just want to make sure. Anyway, the fund managers, whether like a tech fund or a financial bank fund, has to be 100% invested, and that has to be over-invested. I mean, not over-invested. It has to be 100% invested, generally by their charters. Now lost my chart, they said. I heard something beep. We will put that back up. Hopefully we're back to normal. Anyway, you've got to be 100% invested. The reason why is money managers will buy the different funds, and of course it is up to them to actually try to put the thing together in a way where they will hedge out all the things that they don't like. So we'll say they want to be in tech, but one money manager wants to be more exposed to technology than other, at least to the upside or the downside. They will actually buy puts and calls and ES and other instruments to set up their risk profile for that particular fund of money, not fund of stocks. So about 85% of all of the ETFs and funds and fund managers have a codicil in their charter that says we will be 100% invested by the last 2 or 3 days of the month and into the first 2 days of the month. That way, the money manager can always rejigger his hedges. So what happens, of course, a sucker never gets an even break. They mark those stocks up because guess what? That's when the 401 money comes in and it has to be spent. So I always wondered just how much better some of these unmanaged funds would do if they had to buy on the 15th of the month or the 18th or any time other than the first couple of days of the month and last couple of days of the month. But that continues to move on. What else do we have? Well, I think that's about it. I think it is, we're off 15 points on the S&P cash. You really needed to hold the 2080 level, but it looks like we've broken back down through it again. I think it would be very tough to figure out what's going on. And even the Treasury seems to have backed away from destroying the dollar. We had a low back here that was $91.92 on the low today on the dollar index. We're at 92.80. So it did try to blow out the lows, was not able to do that. Got to 92.94, but we continue to be kind of in this range. I'm suspecting that the Treasury is kind of out of bullets for what they are doing. But we will continue on. We will persevere. And as always, we get together at this time each day.
The following takes place between 2 p.m. and 3 p.m.
And, of course, we always start off the show with a little histoire.
That it's all just a little bit of history repeating.
It is, and on this day in 1998, the front page of the Sunday New York Times reports an obscure biotechnology company, Intramed, has cured cancer in mice. In the article, Nobel laureate James Watson, who's co-discovered the structure of DNA, says that Intramed's head's researcher is going to cure cancer in 2 years. On Monday morning, Intramed's stock skyrockets from $12.06 per share from that closing price on Friday to $85 by the end of the week, after later reports basically say that they ain't going to do it. Intramed's stock has sagged to $33.25. It is back to $12 in a few more weeks after that, leaving a lot of people holding a very expensive bag of poo. On this day in 1998, those that live by the news also die by the news. But always sell when you can, not when you have to. Of course, as always, as we close the show. If you're interested in this kind of news, you can always check out Jason Zellwig's site at jasonzellwig.com, where I get many of these articles and news articles for Histoire. As we go into actual news, we've got, let me see. I've got something out here I want to do, add. And what was that? I had it here. See if we can find it. I know I did it. There we go. I found it. Mr. Cook from Apple, the current CEO, is making a kind of an apology tour. Did it on CNBC last night. But he did a few things that kind of made me think that maybe there's a little bit more going on in Apple than maybe I even thought. I was not the raging bull on Apple. In fact, last year, I thought we reached peak smartphone. We'll talk more about this when we come back. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And of course, Tim Cook came out last night on CNBC and was on Cramer's show.
Bring me the head of the false prophet, Jim Cramer.
Anyway, he talked about it for a little while. I listened to the interview just because, of course, I write the Tech Insider, and I have to be privy to all when these people speak. Didn't find much in there. I did find his arguments rather specious. Again, we brought it up, I think, the last few days, and that is, in the United States, the average price of a new iPhone is about a 40th or 50th of the average consumer's total pay, gross. In China, that is about 10%, and in India, about 25%. So they tell us, basically he's telling me that there were 50 million people in China's middle class. 5 years from now, there will be 500 million. Well, I heard that 5 years ago, and it just doesn't hold water. Unfortunately, they are not growing. In fact, they are shrinking. The numbers out from this morning basically put a hitch in the get-along of the S&P futures, if you missed that. But it was kind of interesting. It was kind of like an alternate reality interview. He said, should there be any lingering sluggishness in China, Apple now is really putting energy into India, which is just getting high-speed LTE cell phone coverage, has a huge young population. As we said almost a week, maybe 2 weeks ago, Apple was trying to get into India by selling its used phones that got traded in, and India shut them down. Of course, just like Apple was shut down in China from their iTunes store and their other media efforts. But it became rather interesting and almost Orwellian. We'll talk more about Orwellian in a minute.
I could not be more optimistic about China. I think the long-term thesis is intact. There has never been anything like it in the history of the world, and I'm still as optimistic as I've ever been.
He is, but what he said after that was he was working with the government to get back online soon. And all I could think of is Orwellian statements over time, or there's always something that kind of sticks out that makes you think somebody is just a little too cute. I remember in the 90s, there was a certain president, and they had video of him basically doing something wrong. And the White House continued to say this film, and first of all, it wasn't on film; it was on video. But they kept on referring to this thing as film, and I thought, it's like, why? If it was video, do they think that means that it's real? But if it was a film, then maybe it's some kind of weird made-up thing of the vast right-wing conspiracy. It just was a little tough to think why somebody would use something so weird as that. And of course, anybody that read 1984 is familiar with a thing called newspeak. That is where you can't actually say anything that you actually mean. Everything's got another name and another meaning. And of course, we've been headed into that way for a while with political correctness. But to get back online assumes that you're just offline. Someone pulled out a cable or tripped over a wire. You just need to plug it back in. This is the government that told you to get the hell out of Dodge. It wasn't a government that just said, you can come back next week. They said, just pull the plug. You're not doing business here anymore. I don't see any other change. We've already seen Google leave. We've already seen others. And to get this kind of almost ability to ignore reality.
I reject your reality and insert my own.
Is what I thought of when I heard this. But a lot of times there's just one or two sentences out of an entire interview that actually trigger something. But they most of the time I always see that there's something in there. And many times it comes back to bite the stock. And I think that there's something in here. Of course, all the time, Apple stock was getting ready to bounce anyway. I just think he hung around until it was about time to buy it off the lows. But I don't know what else you can say about that. It's up $1.50, but of course, off the highs of 132, which most people will not tell you about. I don't think the stock's going out of business. They have $230 billion. Everything you can say about it, but $230 billion is great. But can you get this thing back on track? I've had a theory, and we've talked about it many times on the show over the last few years, and that is, in a tech company, the worst thing you can do is take a CFO and make him the CEO of a company, because guess what? They do not share the right kind of mentality for running a company. I've kind of, on occasion, referred to this as the Star Trek thing, where you have a Kirk who's willing to take risk, who's willing to do things, and not always look at what the odds are. And of course, you've got Spock sitting over in the corner, always figuring out exactly what the odds are and playing it exactly the way the odds say. Unfortunately, the CEO's job is that of a high-stakes gambler, of a good poker player. And of course, just the opposite is what you need in a CFO. After 20 or 30 years of doing things like CFOs and accountants, I think it's kind of hard to figure out and make these guys, I don't know, the kind of party animal types. It wasn't in their personality to begin with. That's why they are on the finance part of these companies. They like numbers. They don't do well in public. I had several people email me about how well Tim Cook comes along. And nobody thought he was ever going to be a Steve Jobs. But I think he continues to play risk-averse football. And how many football games have you seen lost because they get into the last 2 minutes and they quit and they start playing differently, or even last 5 minutes of a game, they start playing it differently. I can understand kind of a prevent, maybe in the last minute if the game is that close. But if you've been doing what you're doing and it's been working the whole game, playing not to lose normally is a problematic. I also talked to people that were in the fight game, actual pugilists, and they normally say, if you really want to see somebody hurt in a ring, start going about half speed. And I think that's kind of what we're looking at. We're looking at an Apple that's trying not to lose and not to win, and that is a problematic. We got a few more things to come before we get into charts. A stock chart, or not a stock chart, a chart that may even make you wet yourself. It is so scary. We will be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And before we get into this extremely scary chart, folks, we will talk about that in a second. Just a brief reminder, Andy Heck is getting ready for his big, 4 different Wednesday night epic college education on commodities. I think of Andy as the emperor of energy, the monarch of metals, the Ayatollah of agriculture, the lord of livestock. And of course, you need to go to the front page of TFNN if you want to know all about commodities. If you want to get your PhD in them, check out Andy's course on the top of TFNN on the front page. We're going to go right to Pat in Boston. And how you doing today?
I'm good.
Pat?
How are you?
Another day in paradise.
Yeah.
It's going to rain tomorrow, so I'm trying to get all the paradise in today.
It's going to rain every day. Until next week. What I'm calling about is Mobileye, and I wanted to know if she's going to get a jump on her earnings this week. Thursday, they're coming out.
I dislike this chart just like the rest of the market. It's, it basically was over a 9-day moving average for the most of the time, kind of back to February 24th.
Yeah.
Normally when these markets are like this isn't as clean and pretty as the textbook versions that you like. But normally these things go back to the last time. And that puts this thing, I think, probably just if there was no earnings, I would suspect this thing was coming back to 34 or 33.
Okay.
I dislike the way that this thing came down on, what was it, the 29th. Volume was 3.4 million shares, and it's kind of come down. But tell you what, stocks that have already started to weaken going into earnings have not done well. The ones that have held up are kind of 50-50. But the ones that have already started to sell off are very suspect. Now, can you get a bounce still because these things are over-shorted? Yeah, I haven't looked at the short level on Mobileye. I do know, though, that there are about 5 big guys that are extremely good at shorting that are all over this stock. I bet if you go back and look at it, it's got a super high short sell. So I probably wouldn't short it. But at the same time, to get this thing to really move, you're going to have some good news out of it. You might get a nice pop from a short squeeze. After that, I'd be out of it still. But I don't like it pulling back before earnings. I dislike the fact that this is a target of many on Wall Street that are more than willing to throw mud on it or anything else they can find very quickly. I don't know how much they actually covered on this. If you can give me just a second, I will go to my special program that I've written just to work with shorts data and take a look at it. So let's see, MBLY. Okay, and I will actually show it here. Yesterday, 21% of the shares traded were shorts. Doesn't mean it, they went home that way, but a huge amount of people jumped on this on shorts. So some of the days have been 24 and 30% short. If we look at the longer term data out here, days to cover, this is what I thought. Days to cover anywhere in the last 2 cycles from the 31st of last month, 12 and a half days. It's gone to 14 and a half days for the last bi-monthly report for the percentage of shorts to 14%. So this is certainly not one that you want to even think about being short right now. But, man, there's a reason why these people are all over the stock. And that is, can you get a bounce? I think you can. But I would rather see that you got fairly decent news and try to play the short squeeze after that than try to ride this through earnings. I think it's a coin flip.
Okay. You made it clear. Thank you. Thank you so much. Okay. Bye. Have a good day. Bye.
And what else do we have? What else do we have? And just got a couple of messages here. Oh, I needed to get back to my chart. And then we'll be done with the news and we'll get into more things. Saw this out last night. This was not meant for the general public. This is a chart, and what it shows is the percentage of bonds with either 0 or negative yields. And if you'll see, going into July of 2014, most bonds were generating at least some level of profit over time. If you're watching on Tiger TV or in the Den, this red is all of the bonds that are losing money, and people bought them knowing that they're losing money. They used them to park funds. It is getting horrifically bad out here. In fact, 23% of the bonds globally yield less than 0% at the present, and it's gone up astronomically since July the 15th. That should tell you something wicked this way comes. I suspect that we are at the start of that now. I don't know if the Fed has another gallon can of gasoline to throw on this fire before it totally goes out. I suspect they'll try something. But negative interest rates and the bond market dwarfs the equity market. If you want to talk about a kind of market in which money goes to money heaven.
There will be a giant sucking sound.
As Ross Perot used to say, this is the chart that should scare the bejesus out of you. Anyway, that's okay. It wasn't a chart that was actually supposed to see the light of day for us mere mortals, but it did kind of make its way out, find escape velocity, and now is kind of one of the bigger things that people have, at least those that are kind of deeper into the market, not your retail CNBC kind of guys, but the people that I tend to follow a bit, that are more macro, are looking at some of this data that has come out. And I think that's should be something you should be well aware of. The interaction, and of course, always when you pull some kind of stunt like QE and, of course, all the other stuff and negative interest rates, you never know what the unintended consequences financially are. You know there are going to be some. There is no drug that does not have a side effect. There is no cure that does not have, at least some people have negative reaction to. There is no test that is perfect. And it becomes incredibly, makes me incredibly nervous. I've dug more through this than just the surface part of the chart. I'm not a big Bond guy. I like James Bond, but I don't know a lot about, never was into the bond market itself other than looking at as a counter trend to the equity market. But be afraid, very afraid of the bond market. Don't know exactly how that would work, but I think we've got at least a dirty bomb, if not a nuclear bomb, hanging out in that space. We'll be back after a moment.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And after the bell, we've got CBS tonight, Chewy's Holdings. This is a fairly recent IPO in the last year or so. Kind of tried to sell themselves as a Chipotle, CMG. I don't know if they want to today. I saw that they had problems earlier in the day. Concurrent Software Corporation, Cray Supercomputers, Diamondback Energy, Glue Mobile, Illumina, Live Nations, Masherac, Noodles and Company, another IPO that hasn't done all that well. Nutrisystems, Oclaro, Regency Centers, Rigel Pharmaceuticals, Verisk Analytics, Western Union, Zendesk, and the Zillow Group. So we will continue to keep an eye on those after the bell with Tom O'Brien in the 4 o'clock hour. And it's time to actually get to some charts. Of course, we're off about 16 points on the S&P cash with a brisk volume of 2.9 billion shares on the New York Consolidated Tape. Let's go to some of these movers out here. We'll try to get through as many as we can. Axcelis Technologies down, as many of these stocks have cracked under their 9-day moving average. Now they've fallen apart. This one's down a great deal more today. Don't know if there's anything bigger on a chart level. Accuride Corporation, it was down a little bit more, of course, in the pennies. This one is the one that has blown itself apart today. Aegean Corporation, AEGN is the symbol for you, those at home. It gapped up on the 1st of March with almost 500,000 shares. Came down and actually filled it with fairly light volume so far today, but you've got to keep an eye on this. A pretty nasty move. And, you talk about the kind of candles that wipe out trading. This one has all the way back to the 1st of March in a single day. Kind of like Superman, can jump over a building with a single bound. Advanced Energy's up a bit. Now, this is the one or the kind that I want to see go a little sideways, and then the next close under the 9-day moving average would make me say that is the signal to pull the ripcord on this. This one has been going up since January 27th. And, you get a little pop out here. As long as you don't get any kind of volume to the upside in the next little bit, the next 2 or 3 days, you get the next close down on many of these stocks below the 9-day moving average, you will see the market shifts and gets a deliberately more bearish tone. There's not much in that one. Let's look at AMAG. A lot of these things, as soon as they click underneath it. Ambarella, let's go back and look at that one. Saw that one was doing rather poorly today. We'll go to GoPro 2 here in a second. Down, not a lot of energy. I guess people are still going to be buying a lot of things that need their compression chip. If you're unfamiliar with this company, their claim to fame was hitching their wagon to GoPro and making the chip in most of the GoPro cameras that instantly compressed a video and put it to a memory chip in the camera. Certainly looks like you're at least going to get a test of the $36.66 low from March 16th. GPRO. GoPro, and kind of down the same kind of way. Actually, volume is not that horrifically bad in this, but it's at least going to test this March 29th low at $11.08. That has 7.2 million shares. We're getting close today with 4.8. You want to see how the volume comes in. What you really have to hate is this high volume low, and that is the February 4th low that had 21 million shares at $9.01. I would say that you're probably looking at a 75 to 80% chance that that $9.01 low does get rather than later. Anadarko, we talked about this one potentially closing under yesterday and seeing more pressure on it today. Volume is picking up on this one. A lot of discussion of whether or not the commodity, at least ex silver and gold, is over. Some of the REITs out here not acting well to news. Huge volume in ARR, which is Armor Residential REITs. This is down on some significant volume. And again, in a single day, you've wiped out a lot of trading that goes back pretty much till the beginning of March. And everybody since then is in a losing position. Athena Healthcare, this one, had some pretty big rocking on news back on the 29th. Continues to move down. We want to see how the volume comes in here. Again, bigger, heavier volume lows that have been untested are still out there. It's not a huge volume low, but it certainly looks from the way that it came down with energy that 114.59 gets tested. You can give me a call at 877-927-6648. ATX, one of these penny stocks, up to $3.92, back down. Huge energy there. Of course, you would want to wait for that thing to come back and fill that gap now, and maybe then something might be interesting, but put that on your radar. It is on mine. Build a Bear Workshop. I should probably own this, being the polar bear of TFNN, but not bad looking. I wish I would have seen this thing. It was looking fairly good out here. Went sideways for a great deal of time, really back to the mid-March. Now, yesterday, kind of had a little volume to the downside. Today, on news, decent moves out here. And I guess I've never been in one of these, but I hear people talking about it. I guess you take your kids to it, and it's kind of like a craft thing where you put everything together. It's not really where I turn people that are bullish into bears. That's just a horrible rumor running around, probably caused by me. Barclays, a lot of these banks out here looking rather sour and dour. I'm going to have to find out some more words for bad for banks in Europe. Of course, more bad news about probably the British exit coming this way. This did have a nice move, mostly on capitalization from the various countries in the EU. This one has broken and fairly decently on a gap down today, as, of course, once that news from China came in, continued to be problematic. What is Cliff? CLF, right? Cliff's Natural? Is that what you're talking about in the den? Cliff, was it CLF? Is it just CLF? Isn't it? I think so. Cliff's Natural Resources. Some of these are still above their 9-day moving average. So to me, they haven't made or gotten a signal yet. I still think that, yes, we could see these crack. These just have not yet. I don't think in fact, Jesse Livermore said it best. Markets do not end in one giant explosion. They tend for the most part, to roll over. We've got, I think, a majority of the stocks rolling over already. We've had a lot of stocks that were down to nothing, and they're bounced, and it still has a lot of shorts running. I think that these ones that ran off the bottom will be probably the last to roll over as the market does. We'll be back in a moment.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And again, it's pretty much a fairly good pattern that we're seeing out here, and that is that when these stocks decide that they're going under their 9-day, they are doing it with a gap down that is fairly reticent with volume. Amplify, Snack Brands, don't know much about this one, but it is cracked and one of the bigger movers. British Petroleum is and does look like this thing is going to close under today. One more maybe close above, and then one more. I think we're in a kind of a bigger pattern out here that does look like maybe a lot of these stocks, like in this one, it wants to probably go back where this thing first gapped above the 9-day, which is the what is that, April 8th, and that would take you to about $30. I mean, it's not a big deal, but probably in the bigger scheme of things in energy, you are going to get that pullback on most of these, and once you gap down, a lot of times it's just like Apple. They're going to try to push it yet again after the bounce. And can Apple bounce to $100? Yeah, Does that change anything about what's going on with it? The answer is no. And, you basically just wait for the bounce to go back on something like that. A lot of these stocks continuing to move higher, though. The Chemours, CC, don't know a lot about that particular company. Did want to look at Clorox, though, on some of these other stocks. This thing looked like it's done a Hail Mary trying to get through its high, but could not do it. We've talked about this for the last week, where a lot of these stocks have good news, have at least decent volume, try to blow out the previous highs, try to come along with at least similar volume, but cannot hold those highs. In the case of Clorox, you're talking about 131.78 from December 17th, 132.19 from February 1st, 131.50 from February 28th. You spiked it today. I think we're starting to get some signals out here about some of those. Others in energy that look like they have dropped the chalupa in the punch bowl. Certainly it's ConocoPhillips. This has cracked. Now, mostly you think these things are probably going to pull back a little bit. I think they're going to move back up into the 9-day, and then that's probably when we're going to see the real destruction on any kind of pullback in this market. What else do we have here? COTY. This one cracked fairly hard today. Again, this thing has been moving up and above the 9-day pretty much since the 28th of March. Down, it opened a little down and really started to move. Volume has come back in here. This probably would be moving back to the gap at around $25. That gap on volume of about 4 million shares was on the 4th of February. So, basically you're hoping for less than 4 million shares in COTY today, COTY. You got 2.8, 2.9 already. I think you're going to probably get close to 4 million by the end of the day. Wanted to get back into Europe again, that whole Greek exit thing being a little bit of a bugaboo. Of course, everybody put a lot of juice into the Deutsche Bank and some of the other banks over there to try to get them back and going a few months ago, or 6 weeks or 8 weeks ago, whatever. Doesn't look like that is holding either. Down on fairly significant volume today is Deutsche Bank, like many of the banks in Europe. This thing gapped up and certainly looks like it's coming back into that gap from the 13th. Anyway, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time. Hang on for the one and only Tom O'Brien. And then later, Andy Heck.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.